All right. I was called a scarecrow back in high school. I didn't think it would happen again. So thank you guys so much for joining us to talk about Eigenlayer and restaking. I know you just got a light introduction before going on, but I'd love it if we could do one that's a little bit deeper that covers who you are, what you do, and a little bit about your company. I'll start, and then we'll go that way. So my name is Victor Bunyan. I work on protocols at Coinbase. So I spend a lot of time working on staking. We operate what was previously called Coinbase Cloud, which is the largest staking operator. And I work on base and governance and policy issues and things of that nature, everything as it relates to protocols.
Hey, I'm Tarun. I founder of Gauntlet. We do a lot of risk management within DeFi, and I spend a lot of time thinking about different types of risks within AVSs and restaking.
Hey guys, I'm Vias, one of the early team members at Eigenlayer, and primarily lead strategy and BD for ecosystem growth. And yeah, pleasure to be here.
Hey guys, I'm Dorothy. Sorry for my voice. I lost my voice a bit. I swear to God, I haven't gone to any party yet. That's a bit unfortunate. I'm head of growth at Algorithmic. At Algorithmic, we built restake rollups that combines restaking mechanism from Eigenlayer with rollups. We help decentralized rollups, including the sequencers and validators, and to provide restake rollup services to our partners. Thank you.
Amazing. Thank you. So we're going to dive right into Eigenlayer. And we're going to start with more introductory material in case folks aren't familiar. And then we're going to get spicier as the session goes on. And so, Vias, could you start us off with an introduction to Eigenlayer and explaining how restaking works?
Yeah, definitely. Eigenlayer is an economic security and validation services protocol that is designed to bring innovation back to Ethereum. You know, in the last couple of years, we saw plenty of projects launch their own tokens, which determined their entire security based on their market cap, and we all observed plenty of debt spirals that occurred. And so, in addition to solving the bootstrapping problem for these new protocols, and while they can retain their tokens for governance and incentivizing users, we wanted to enable a way for all of this extractive value that was leaving the Ethereum ecosystem to come back and be secured by the Ethereum staking and operator community.
Amazing. And Dorothy, from Altlayer, which is one of the AVSs, I'd love it if you could tell us a little bit about AVSs. What are they, and why did Altlayer decide to become one?
Yeah, so AVS stands for Actively Validation Service, which doesn't mean much. If we don't look at what it really does. They're really leveraging Eigenlayer's restaking service to help new blockchains, new projects to re-leverage or rent the Ethereum security just by using all the Ethereum nodes and restake its assets to safeguard all these new projects. So when you in the past, when people start a new layer 1 or Oracle or any other type of blockchain project, they normally need to build their validator program from scratch. They need to attract a lot of validators to join their ecosystem and help them build out all the nodes to maintain and operate the blockchains. But with Eigenlayer, they don't need to worry about it anymore. They can just rent the security offered by Eigenlayer and have all the Ethereum node validators to run all these projects on nodes. So it's easier, a lot more cost saving, and a lot more easier for them to bootstrap.
Yeah, amazing. And the really like 2-second version of that is that Ethereum validators can do a lot more work, and they can do more work for more pay. And that is incredibly valuable and useful, not only to the validators themselves, but also to projects such as Altlayer that want to take advantage of that. And so, Tarun, can you talk to us a little bit about, so we heard about the validators and the AVSs and the network. Talk to us about the dynamics of validator operators, and more explicitly, how should these operators be thinking about the risks and rewards of participating on Eigenlayer?
Yeah, for sure. So One thing to think about layer ones is they generally are, in a lot of ways, extremely over-collateralized in how much security they're providing. If you look at the net transaction flow in most blockchains, the amount that's staked is significantly higher than the sort of maximum attack surface you could have, and that's something that's always necessary in blockchain networks when you're bootstrapping and you need to actually build the network effect for apps, but also for validators. And restaking, effectively, you could think of it as a way of reusing that stake for these kind of new productive services. These services obviously range from things that are sequencing rollups, doing things like running a decentralized sequencer or shared sequencer, to something that is like a zero-knowledge proof generator, proving network, to something that's like an oracle. Now, just like applications have different sort of risk and rewards in terms of applications like being a Uniswap liquidity provider, you kind of generate fees continuously on every block, but you don't have these kind of like large loss over a single block type rewards, versus other things like a perpetuals or lending protocol where you might lose all your money in a liquidation when the market moves. You have the same sort of properties within Eigenlayer services. Some of the services will be like giving you a small amount of extra income every block and have sort of lower risk. Some will have higher amounts of potential risk, but hopefully will be generating enough fees to compensate for that. And validators have to take a portfolio approach to this, where they look at the set of AVSs, decide how much to allocate to them based on what they view the risk-reward profile is. So there is this sense in which the validators also have to do a lot more work, but obviously they're getting compensated for it.
Yeah. Amazing. Well, thank you for that thorough explanation. So we're done with the introductory part. Now we're going to get spicier. And so, there's almost 5 million ETH being restaked via Eigenlayer right now. And one of the concerns that people brought up is what happens with consensus overload. And so I'm hoping you guys can talk to us about, what is consensus overload? Is it actually a risk? Is it a bad thing? And what is Eigenlayer doing about it?
Do you want to kickstart the room?
Yeah, sure. So, I think there's the canonical reference for this is a Vitalik blog post called "Don't Overload Ethereum's Consensus," and the idea is that consensus has to do a lot of stuff, right? It has to validate sequence of transactions. You have to also get different validators voting on certain things. You have to be able to deal with sort of adversarial environments where some of the validators might go down. Some of the validators might take 100 times as long to reply to a request. And the idea that you're giving validators even more work that's outside of the initial sort of form of consensus means that there's more of a likelihood for some type of failure that happens in the application you're providing to cascade into the base layer, which would be bad for security. And so the goal of trying to not overload consensus is really about making sure that the types of applications that people are using within restaking don't burden the act of consensus. Maybe they happen at a lower frequency. Maybe they can happen sort of in a separate process that doesn't have to interact with the main chain as frequently. But another thing people sort of have to think about is how much restaked does an application really need, right? An application that maybe is only generating thousands of dollars of value in extra yield might only really need $1 million max of security, extra security. And so being diligent about understanding how you're kind of redistributing the security and how you're sharing it across AVSs is actually quite important to making sure that you don't overload this, and such that the validator says distributed over the different AVSs.
Yeah.
He hit the nail on the head, but there's some complexity around ensuring that this shared security pool doesn't get fragmented, right? And we don't want to enable these. As a platform, we retain a level of credible neutrality when it comes to what operators and what AVSs, these actively validated services, want to do. But the reality is, as I mentioned, we want to bring innovation back to Ethereum, and we want to bring on these more complex, more throughput heavy, more high block space heavy use cases. And so there's going to be a necessity for a lack of stake centralization across both the operator and AVS network, but also in terms of ensuring that while we bring on these use cases, we're also building the infrastructure required to ensure that as much computational scaling is offloaded and we keep the essential burden on the Ethereum settlement layer fairly minimal.
Yeah. And Dorothy, I'm wondering if you could just double click on something that Tarun said from the perspective of, you guys run an AVS, like you have a certain amount of restaked ETH. How do you think about the relationship between the amount of ETH that's restaked to the services that you guys are providing for the rollups that you're helping operate, to the inflation rewards that are potentially being generated, to the transaction fees that are being generated? And like, how do you kind of like square that circle and think about that relationship between economic security and services rendered?
Yeah, so right now I think a lot of people are kind of preempting the ecosystem before it like matures out or plays out. So right now the whole Eigenlayer ecosystem, I would say, is quite chaotic. It's in its early stage where people are expecting a lot of return, a lot of rewards without understanding what really are these AVSs doing and what all these different projects might be able to provide in return. For instance, we help rollups to decentralize, and we ask all these rollup projects to provide token rewards to the stakers or to the node operators. But in reality, a lot of these projects might not be billion-dollar worth of businesses. There might be only $10 million worth of business in reality. But right now, it's just a lot of front-running and preempt actions going on. So the community and all the node operators are just blindly staking and offering their service to every single AVS they can find, which is not bad for the ecosystem to grow from the beginning. But I think once we have a few months of more AVSs to come in, once we see a lot more various type of businesses to join this staking service marketplace, then we can see who are the real business that can provide real yield, and what kind of operators or LRT projects are really good at identifying the highest risk reward and manage the portfolio properly for their users. So right now it's very tough to tell you what's the expected return because it just varies.
Yeah, no, I'm so glad you brought that up. And I think that the point around, a little bit of the chaos in the ecosystem is both a good and a bad thing because it's so good for growth and it's so good for people to be excited. But I think to your point, right now, because people are optimizing, for airdrops and they're optimizing for like being early and they're optimizing for like all kinds of stuff, and at the same time, there's no slashing conditions enabled for most of these services yet, and so you basically have like all reward, very minimal risk, and so everybody's doing everything, and there's not that deep thought necessarily around doing the proper evaluation and being really diligent, and that's something that's again great for growth, but at the same time like has consequences down the line. When the rubber meets the road, and then, as you mentioned, like people have to see who's actually generating yield, and really what that means is who is providing a service that end users, whether it's rollups or somebody else, really cares about, like who's contributing value to the world. And I'm super glad.
Well, cares and pays for.
Cares and pays for. That's right.
They show their care via payments.
Yeah, I think to expand on that just a little bit, I don't think the market has fully understood or has been informed from our perspective, from our side as well, on how restaking yield separates itself from DeFi yield. And I think the reality is the majority of people that have been, for lack of a better word, aping into Eigenlayer are assuming that it's just like every other DeFi protocol that they've interacted with in the last few years. And I think a far more robust mental model to understand Eigenlayer is we're trying to build the equivalent of like cloud infrastructure for Web 2, but bringing that to Web 3 in a more decentralized manner. And so thinking of us more almost like a decentralized SaaS company where people are paying for the security as a service in like fixed yield, in proportion to the usage is more accurate than looking at us like a DeFi protocol. And so there's definitely some complexity around how we communicate that, but also the incubation of this ecosystem has led to rapid growth and rapid speculation. And the reality is, like, we don't have slashing live today. We don't have payments live today. We're actively building both of those things coming this year. And it could be interesting to look at almost like these operator ABS positions, similar to how catastrophe bonds view very local systemized risk. And these liquid restaking tokens that have emerged, which is like this amazing new entrance that we didn't even expect into the market, as almost like catastrophe bond ETFs that aggregate these systemized localized risks of these ABS operator positions. So yeah, there's a lot of complexity and there's a lot of information asymmetry right now. But as we deploy payments, deploy slashing, and we start to see a more robust open marketplace where ABSs have to compete with each other for the yield that they pay out to stakers and operators based on the amount of block space that's required, we're going to start to see far more interesting dynamics.
Yeah, I totally agree. And I'm really glad you guys are thinking about it from that way. So another spicy one that I think other people here will really enjoy is, so we were talking about how validators can potentially earn more from participating in Eigenlayer in addition to the staking rewards that they earn by participating in Ethereum. And so I'm really keen if you could talk to me about, like, what does this mean for Ethereum? And so specifically, what does it mean for Ethereum staking rate and inflationary schedule? Is it a good thing for Ethereum staking rate to continue rising because of these increased rewards? Should Ethereum considering lowering its issuance rate because validators have access to increased rewards from Eigenlayer? Would a lower issuance make ETH a better money? Like, how do you think that all works out?
Yeah, so, if you look at, and this is just one mental model that's like not fully complete, but if you look at Ethereum almost like an app store, we try to think of ourselves to some extent as also Ethereum's like Xcode playground or like test flight, where the, some of the protocol features that could be inherited into the core protocol could be first beta tested on this subset of stake within Eigenlayer. And so the question becomes, as you inherit more features into the protocol, why wouldn't you necessarily pay out a higher staking yield, right? And it really depends on the ecosystem and the demand for those features and things like that. But it's going to be interesting to see how the market reacts to the stabilization to some extent of all this like speculative yield becoming more specific yield that we will be able to see paid out. And from there, we can make a more accurate assessment on whether we need to adjust the staking rate of return.
Yeah. Tarun, do you want to comment?
Yeah, so I think adjusting the inflation curve for Ethereum is a topic du jour nowadays. But I would say that one of the rationale that people have for doing this is that it makes it less profitable to have these liquid staking vehicles that aggregate a lot of stake, because their economies of scale only really start making sense at like a particular yield number. I think the problem with that for something, if you want to lower the inflation curve because of something like Eigenlayer, is that the actual yield per AVS is going to vary wildly, right? Like I said, so there might be some AVSs where, say you're sequencing a rollup, you're getting a small amount of fees on every block, but you're not getting like a huge jump. It's very consistent, kind of low variance, almost like a bond. And you might have other AVSs that maybe it's like a ZK proving network, and like, hey, you don't have to generate proofs every block, but once a week, you have to generate a ton of proofs in response to some type of event. In that type of thing, you have a payoff that's very infrequent. And so I think if you think about inflation curves in blockchains, there are a continuous process, right? Every block has some amount of inflation, and some of it is deflation in the case of when you have a burning mechanism like Ethereum does. And doing this matching between the kind of durations of yield you get, where you have this continuous yield coming from the base protocol versus the variable yield coming from things like MEV, things like Eigenlayer, it's actually quite a delicate balance to strike, and I don't think that you're going to just be able to kind of come up with an answer a priori for how it should look. It's definitely a type of thing where you need to really see how you could homogenize those two before you kind of justify a larger decrease.
Yeah, I think it's a really great point, especially on the lumpiness, because one of the things that we think about is predictability of cash flows. And so to the extent that validator operations continue to get professionalized, institutionalized, there's going to be more and more of a focus on really understanding what does security budget look like over time. So another topic du jour, as you mentioned, but also a spicy one, is there's been a slew of restaking protocols that have launched or been launched or in the process of launching that are, in some ways, but not others, necessarily competing with Eigenlayer. And so one question is, do these make sense, right? Like, is there a need for multiple restaking protocols? Is restaking particularly optimized for Ethereum, based on the way that the Ethereum validator set is? I'd love for you all to chat about that.
Yeah, I think there's a few different points here, right? I think one, we at Eigenlayer, one of our dominant narrative right now is, and you'll see this all over our Twitter, is like infinite sum games. But the reality is, like, we don't believe in zero sum games. There can be multiple players in this market that will be able to drive value. It might be a long head, short tail. We don't know what that dynamic is going to look like. But I think it's very positive for us because, like, you need the optimism to your Arbitrum. You need the competition in the space to nurture the innovation. So I think that's really healthy. So again, super excited for the protocols that are building restaking, whether it's on Ethereum or in other ecosystems. But I think there's a very high bar for diligence and security and risk management that's required to execute this effectively. So, because people's assets are locked up, right? People are restaking their assets, and calamitous slashing events could have really negative circumstances. The second part of the question, which is, in other ecosystems and whether Ethereum is like specially designed for this, is, a conversation that we were having earlier, which is, in Solana you have the majority of this like initial half of this bull run is happening on Solana because one, traders love the ability to execute transactions quickly. There's a lot of liquidity to enter and exit positions, but the reality is Solana's market cap to stake ratio looks much different than the Ethereum stake to market cap ratio. We're dealing with nearly $70 billion, and my stats might be outdated, but nearly $70 billion of Ethereum staked, when it comes to somewhere around like $2 to $4 billion of Solana staked, whereas the market caps are completely different. And so I think these ecosystems value different things, whether it comes to stability versus agility. And so Ethereum as a community has valued stability in terms of their decision making and protocol upgrades and things like that, where you can see and also has a far more like varied, diverse, very minimal footprint operator set. So you can really enable people to participate in this ecosystem and like bring in more innovation back. But on Solana, you're starting to see some new designs that like share similar mental models, but it's going to be very interesting to see how they execute considering a leverage ratio of stake to market cap.
So I'll take the other side of that. I actually think there's a lot of things that people are doing on Solana that are opt-in extra slashing rules. So for instance, in Jito, there are, for MEV payments, there's sort of a slashing mechanism that's used. You only get your MEV payment provided that you don't miss a certain number of slots within the epoch, and you get slashed otherwise. And it's an extra opt-in slashing rule that you immediately subscribe to by running the Jito Sol validator. A second thing, which is the SWQOS upgrade in Solana, which is basically you have to stake in order to have a certain number of channels in an RPC node, and a lot of the apps, say like Drift, are running their own validators, and they are actually putting up stake to get a higher quality of service. those types of things are extra slashing rules, effectively. And I think what ends up happening is that in these markets, you may find that people have opt-in extra slashing rules, but in different places because of the architectural changes and also differences in the economics that are being talked about. So in Solana, the MEV revenue as a function of the stake is actually much higher than Ethereum nowadays. And because of that, you actually have to have a very high amount of security on people kind of missing slots but taking MEV payments and griefing people. And so the place to look is actually at where you're seeing fee accrual in different parts of the system and where you actually need to have penalties for people for sort of missing some of their tasks. With regards to the first question about the sort of how the market will shape out market share-wise, I think in a lot of ways, restaking kind of is in some ways harder than both LSTs and DeFi. In DeFi, you can have a lot more sort of like multi-competitive markets that might be oligopolistic, but generally there tends to be market share distributions of sort of like 60%, 30%, and then everyone else. In LSTs, you have something that's a little more competitive, but oftentimes the competitive advantage for LSTs is how much more yield can they provide due to MEV? So that's a variable yield component that can be used to differentiate them. And also how much better of a liquidity advantage does an LST have? Liquidity advantages come in two forms. One is in terms of DEX liquidity for trading the staking derivative for the underlying, so that you have this sort of synchronization of what the true premium of holding the derivative is. The second is withdrawal liquidity. And so this is important to node operators like Coinbase, which is what's their opportunity cost of capital for being in the withdrawal queue? How hard is it to get my money out of the withdrawal queue? In restaking, you have both of these problems combined. And in a lot of ways, this plus the security features make me, at least personally, think it's a much more concentrated market than either DeFi or liquid staking.
Yeah, I think that's a great point, and something you kind of touched on is that not only are these pieces getting more complex, but like staking in general is becoming more complex. If you think about previously, it was just individuals or enthusiasts running individual validators, and then Lido came along and started offering this like node operator set to which you can stake, and it just automatically delegated and got your rewards and all that stuff. And now we're taking things to the next level from there, and that now you have to manage not only like the liquid restaking token, right, which is kind of like similar to LSETH, where that's a regular liquid staking token. So you have that, you have the AVS selection, right, you have the node operator selection, and all of these things are fundamentally, they have a tension there that you have to manage like really, really actively. That adds complexity. And then on top of that, you're layering the DeFi complexity of how these things are actually being utilized. But yeah, so we have a little over 2 minutes left. What I'd love to do is I'd love to give everybody an opportunity to kind of like wrap up with a call to action for the audience. Where can they learn about your project or your company? What action can they take, whether it's to participate in something that you're doing, to subscribe and follow, to visit your website, to read documentation? What would you like people to do?
Okay. I think you can easily find on the Eigenlayer page, there are 7 AVSs that are live right now, one of them being EIGEN, and the rest, the 6 others, are third-party AVSs, and we operate 2 of them. One is Outlayer Mac Alpha, which provides fast finality service for Optimism and Arbitrum. And the second one is for Exterior, our partner that's a major gaming studio that launches a number of games with millions of players in the crypto space. And we're going to launch a lot more AVSs in partnership with Eigenlayer in the future. So you can check out our homepage, Eigenlayer homepage, to find all this information.
Yeah, please check us out on Twitter or our website or any of the AVSs building on top of us. And I would say the call to action for the crowd would be 2 things. One, let's get more informed as a community in terms of, as I mentioned, how restaking yield is different from DeFi yield. And for the builders out there, I think we've built a culture of deploying with, a lot of constraints when it comes to block space. And the reality is, like, Web 2 devs don't think about scaling, because cloud just scales. So the question becomes, what would you build if block space was no longer a constraint in the Ethereum ecosystem? And if you have some ideas, please find me, hunt me down, shoot a message on Telegram. Would love to chat with anyone.
And I've written a bunch about LRT risk, and I have a couple other papers coming. We have a couple of papers and research articles coming out soon on different risk. We'll be on Twitter. So
Amazing. And then for me, Coinbase is one of the node operators on the Eigenlayer restaking network. And so please come and stake with us. So thank you, panelists, so very much. That was lovely. I really appreciate it. And thank you to the audience.